I think gold is going to go up more than eightfold over the next 20 years. In fact, it could do that over the next 5 or 10 years. So normally in a bull market, the gold stocks would be leading the metal, except when you're in the really early stages of a bull market. You see, then there's a lot of skepticism. People don't believe the rally. And that's what we have now because we're early. I think, we're going so much higher than the current price. Whether you buy at 2,500, 2,400, 2,300 is immaterial. What is material is if you don't buy at 2,500 because you're waiting for 24 or 2,300, and the next thing you know, we're at 5,000. And then you're like, well, I'll buy a pullback to 4,500. Well, then just buy it now, right? It's a lot cheaper than buying it a lot higher.
According to the World Gold Council, gold is one of the highest performing asset classes of the year so far, offering year-to-date returns of over 12%. Gold's hefty gains have certainly driven GDX higher, with its upleg climbing 51.6% at best within this same span. But so far, that has only amplified gold a still anemic 1.4x, which is unusual, well into a major gold upleg, achieving new record high streaks. PeterSchiff, a prominent economist and financial broker, is widely recognized for his expertise in economic analysis and market prediction. In his analysis, gold surged to close above $2,500 for the first time, yet major financial networks largely ignored this significant move. Instead, they focused more on Bitcoin, which was relatively flat for the week. Since the start of the century, gold has risen more than eightfold. In contrast, the Dow Jones has only quadrupled in value. Concurrently, Schiff predicts that gold could rise more than eightfold in the next 5 to 20 years, driven by massive inflation far exceeding the early 2000s. However, the Dow Jones Index has dropped sharply in the last few weeks. Gold has also dipped from recent all-time highs, but only slightly. If this trend of gold outperforming stocks continues, then that would make now a good time to own gold over stocks, for perhaps even the next 10 years. Despite gold hitting a new high, gold mining stocks rose only 5%, with broader indexes failing to reach new highs. Schiff explains that skepticism keeps gold stocks lagging in this early bull market, but predicts they'll eventually lead as confidence builds. Now, we present the clips of PeterSchiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Today, gold was up about $51 an ounce to close above 2,500 for the first time ever. We actually closed at $2,508 an ounce. It was up 2.6% on the week. Despite this move, it happened pretty much in obscurity. Even the financial networks, I was watching CNBC a lot of the day to see if they were going to talk about gold, and they didn't talk about it at all. I mean, maybe they mentioned it when I wasn't paying attention, but when I was paying attention, I heard plenty of talk about Bitcoin, but I didn't hear any talk about gold. Bitcoin did nothing on the week. It was relatively flat. I think it's now about 59,000. It's about 20% below its all-time record high. And of course, its all-time record high set in gold was almost 3 years ago. I think Bitcoin is down about 37% over the past 3 years in terms of gold. Nobody is talking about this new high. And really, to put it in perspective, think about where gold began this century or even the millennium, right? On January of 2001, gold was still under 300. So gold, so far this century, it's been about 24 years into it, right? It's risen eightfold, more than eightfold, 8.3-fold, maybe a bit more. Contrast that to the Dow Jones. The Dow was about 10,000 when the century began. It's about 40,000 now. So the Dow's gone up 4x, gold's gone up 8x. Now, sure, the Dow has paid dividends. Gold hasn't. But as far as price is concerned, the Dow has lost half its value priced in gold over those 24 years, even though the nominal price of the Dow has gone up fourfold. But I think that the trend is going to accelerate. I think gold is going to go up more than eightfold over the next 20 years. In fact, it could do that over the next 5 or 10 years because the amount of inflation that has been created over the last 5 or 10 years dwarfs what we created during the first 5 or 10 years of the century. And we're going to create even more over the next 5 years, regardless of the outcome of the election. I'm going to talk a little bit more a bit later about what Kamala Harris is promising, which is all highly inflationary and extremely good for gold. Also, if you look at what happened in the mining stocks, they were up this week about 5%, a little over 5%, which is, not too shabby for a week. But when gold is up 2.6% to an all-time record high, you would expect a bigger move. In fact, the gold stocks as an index, as a group, did not make even a new 52-week high this week, let alone all-time highs. But if you look at like the GDX, the GDXJ, those indexes still need to rally about 2.5% from here to make a new high, which they set a month ago. But when they set that high a month ago, gold never got above 2,500. The high back then was maybe about 2,480. So gold is now maybe about $25 higher than it was a month ago when the GDX and the GDXJ hit record highs. And now the gold has made a new record high that eclipses that high a month ago. The gold stocks haven't done it as well. Normally, in a bull market, you would see the gold mining stocks leading the miners because, they anticipate the rise of gold. Stock markets are forward-looking. Stock investors are looking at future earnings, and they're factoring in the future price of gold. So normally in a bull market, the gold stocks would be leading the metal, except when you're in the really early stages of a bull market. You see, then there's a lot of skepticism. There's a lot of fear and doubt. People don't believe the rally. And that's what we have now because we're early.
With the price of the yellow metal scaling upward, the profit margins of gold mining stocks such as Barrick Gold Corporation Gold, Franco-Nevada Corporation FNV, and Kinross Gold Corporation KGC are expected to improve. While reflecting on mining stocks, PeterSchiff mentions that risk takers should consider them, as they're undervalued due to investor skepticism. He predicts that gold prices will eventually surge, making rising mining costs insignificant. Following a choppy trading session over the previous 2 weeks, gold prices surged to an all-time high on Friday, topping $2,500 an ounce and gaining more than 20% this year. One of the prominent gold ETFs, SPDR Gold Minishares Trust GLDM, also jumped 21.5% year-to-date. With all the macroeconomic factors in play, Schiff also mentions that if Kamala Harris becomes the next president, her inflationary policies could be highly bullish for gold. He also expresses skepticism about the Fed's claim of being data-dependent, predicting that rate cuts are inevitable, likely happening in September, as the market already expects. Let's get back to the interview.
If you are a risk taker, which I am, you want to have more mining stocks because these stocks, again, are so undervalued relative to the current price of gold because investors are waiting for gold prices to fall. Plus, also, the cost of mining has gone up a lot. And every time one of these mining companies comes out and they miss their earnings because their costs are up, the stocks get absolutely killed, right? Any bad news and a stock gets decimated because that's how little conviction the gold stock investors have. They're so scared. And even when, you beat earnings, the stocks go up, but not nearly as much as they should. But I think what's going to happen when you get a huge move up in the price of gold, I don't care if the costs go up. It's not going to matter because they're not going to go up anywhere near as much as the price of the metal because there's so much pent up upside that we have. I think, one of these weeks we could see gold up $500 to $1,000 in a week, right? I want to make sure that all of my listeners have all the gold they need and all the silver they need before we have that week, right? There's no point waiting. And you want to get your positions in these mining stocks as soon as possible before the world wakes up and realizes how cheap they are. Nobody is paying attention. Again, they're not talking about it on CNBC because the average investor couldn't care less about these stocks. And so CNBC doesn't even bother to cover it. Why are they talking about Bitcoin all the time? Well, because that's what their listeners care about. That's all their advertisers are advertising Bitcoin or others cryptos. Nobody is talking about gold, right? Well, that's when you want to buy it, when no one's talking about it, right? By the time everybody is talking about it, the price is going to be much, much higher. And by the time your typical, portfolio manager, whether it's a, mutual fund or a hedge fund or some of these pension plans or endowments, by the time they start buying these gold stocks, it's going to be because they are way, way up. That's what's going to put these stocks on their radar, right? The 5% move that they had this week, that's nothing. I mean, NVIDIA was up 18% or something on the week. So who cares about these gold stocks? They're going to have to be up a lot more. But when these things are tripled, quadrupled, or more in a short period of time, yeah, they'll finally get on the radar of the mainstream. But I don't want my audience to wait until then. I want them to be fully invested by the time that happens. Now, one of the things that would be particularly bullish for the price of gold, and I'm not rooting for this, I'm just saying that it would be very bullish, would be if Kamala Harris were to be the next president. Because I happened to listen to her economic speech today, if you want to call it economics, in quotes. And everything that she is proposing is highly inflationary. Oh, and by the way, before I even mention that, the US dollar index tanked on the day and it closed at a new 5-month low. And, this also is a big indicator because you have the dollar going down, potentially breaking down just as gold is breaking out. And I think once the dollar really starts to fall, which it will, it's going to put even more upward pressure on the price of gold. Oh, and by the way, one more thing I wanted to point out before I get to Kamala Harris. Jerome Powell claims that the Fed is data dependent, that they're looking at the economic data to decide whether or not they should cut rates. And I've already told you they've decided they're cutting rates in September, right? They're going to do it. The only question is, do they do 50? Do they do 25? Do they do 75? They're doing something because the market now expects it. And that's why we got a big rally this week, is because, they're all convinced now that we're going to get this rate cut. But what Powell's been saying all along is the reason he's waiting until September is because he's looking at the data and he wants to make sure that the data supports low inflation and a return to 2%. And he claims that his monetary policy is tight, and it's been tight, and he doesn't need it to be as tight because of the data.
Higher demand for gold from central banks, growing Federal Reserve rate cut expectations, and geopolitical uncertainties have jacked up the price of the bullion metal, with many market participants estimating gold prices to soar well over $3,000 an ounce by the end of 2025. What steps are you taking to capitalize on the anticipated gold and mining stocks surge, and how do you plan to adjust your investment strategy? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.